The Street has revisited 10 bank stock picks made over a year ago based on low price multiples to forward earnings estimates. The results are a mixed bag. 5 are up and 5 are down. While 5 out of 10 would normally be a pretty good record for a stock picker, some of these names have had such dismal results that an even investment in all 10 would have given you a loss of over 10%. That compares favorably to a 17% loss for the KBW Bank Index during the same time period, but it could still be rather painful. The worst performers of these 10 names have been Bank of America, with a 58% decline since September 3rd of 2010 through Friday's market close at $5.64. Meanwhile, Citigroup was down 46% to Friday's close at $28.17 a share. Here are the 3 bank names that have performed the best since we selected them in September of last year. Republic Bancorp of Louisville, Kentucky has seen its shares rise 13% since September 3rd of 2010. The stock trades under the symbol RBCAA and closed at $21.13 on Friday. Based on a 15-cent quarterly payout, the shares have a dividend yield of 2.92%. Republic is facing what may be a radical transformation of its business model. Main subsidiary Republic Bank and Trust has objected to the FDIC's order for the bank to curtail its specialty business of making seasonal tax refund anticipation loans through an agreement with Liberty Tax Service. This was done because the IRS has made it more difficult to determine whether a borrower may be denied their tax refund. The company's tax refund loan volume was cut in half during the 2011 tax season, although profits held up because of an increase in pricing. Quite a bit is riding on a court hearing that's set for February. Both analysts covering Republic Bancorp rate the shares a hold, which isn't surprising considering the upheaval the company might be facing. That being said, Republic is very strongly capitalized, which should provide continued support to its dividend no matter what happens. The shares are cheaply priced, below 5 times the forward earnings estimates for 2012. Next is Hudson Valley Holding Corporation of Yonkers, which trades under the symbol HVB. The shares closed at $20.12 on Friday, rising 16% since September 3rd of 2010. Based on a regular quarterly payout of 20 cents, the shares have a dividend yield of 3.96%, and the company paid a separate 10% stock dividend in November. Third quarter net income was $8.5 million or 48 cents a share, increasing from $4.1 million or 23 cents a share a year earlier. With strong deposit and loan growth, Hudson Valley's net interest margin has increased to a very strong 4.47%. The shares aren't as cheap as they were a year ago at 11.7 times forward earnings estimates, but all 4 analysts who cover Hudson Valley rate the shares a buy. The best performer among the September 2000 list of 10 bank stocks priced the cheapest relative to forward earnings has been BOFI Holding of San Diego, which closed at $16.54 on Friday. The shares trade under the ticker BOFI. The company gathers deposits exclusively online through its BOFI Federal Bank subsidiary, which was formerly known as Bank of Internet USA. BOFI is a very strong growth story, with fiscal first quarter net income attributable to common stock of 58 cents a share, increasing from 45 cents a share a year earlier. Meanwhile, the company grew its loan portfolio by 65% to $1.4 billion. The shares trade for 7.4 times the consensus 2012 earnings estimate of $2.24. Both analysts covering BOFI rate the shares a buy.